I've been in startups since I was about 13 years old, and the narrative that I had always listened to and heard about, and that a lot of friends around me had heard about, was that you got to start things from scratch. You find something at zero, and you have this idea, and you have to build it. You have to get early traction. But in recent years, I've discovered this new space that I've been fascinated by. I had John Steinberg on the show a little while ago. He raised and managed over $500 million, and his whole focus was running a search fund, helping people who want to buy existing businesses, find those businesses, finance them, and then operate them. Today's guest, you might have seen his content on Twitter. He's got over 100,000 followers, and he talks mainly about this new space called entrepreneurship through acquisition. People as young as me don't usually buy these businesses. Usually it's a little older, maybe 25, 30, maybe even higher than that. But wanted today talk a little bit about his personal story because he's been interviewed a bunch of times, and he's a co-founder of SMB Law Group. They've done over $1 billion in SMB deals, and I'm curious to know about some of his career and his content strategy and how he's gone and started that. But then we'll also talk about the space, how you can get into it, how you can be successful, and why you might not need to start from scratch like a lot of folks in business will tell you. So without further ado, Eric, welcome to the Builders and Funners Show.
Thanks for having me, Burke.
Absolutely. Well, Eric, for those of you that might not know you, or maybe have seen your profile, seen your content on Twitter, but never really understood your personal story, I want to get started with you worked in big law, you quit, you start this SMB Law Group, I think in 2022. Tell me about a little bit about your career, but then also like inflection points. The points where that made you who you are today.
Yeah, thank you. Pretty broad question, so I'll give you the chronological happenings in my career, and then we can drill down on any specific point that's perhaps helpful to the audience. But started in big law, just like most any lawyer. I graduated from Duke and began my career in Dallas, Texas, actually working for like a top 50 national firm. And doing general corporate M&A, securities offerings type stuff. Pretty fast. That firm was having some difficulty with kind of the national heavy hitters coming into Texas and stealing the best, youngest attorneys. And so ended up after about a year going to Gibson, Dunn and Crutcher, which is a top 10 national firm, and doing, a couple years of really high level M&A and securities work for them. And then the pandemic hit, and well, actually, it was right before the pandemic. He decided to leave Texas for family reasons. We wanted to be in a little bit different jurisdiction. I grew up in Michigan, had gone to school in Florida and North Carolina. So Dallas was a great place to build a legal career. It's a great place to build a business. If there are young people, listening that are looking for a great place to go to make money and to, to network and to build a career in your 20s, Dallas and Houston and Austin, the Texas environment is a really good one for that. But after having kids, decided we wanted something a little bit different for life. So ended up in Denver, Colorado for a little 2-year layover. And then ultimately ended up closing out my big law career for Kirkland Ellis, which is like the 800-pound gorilla in private M&A, before falling in love with the Main Street investing scene that's happening in what people call SMB, or ETA, which stands for entrepreneurship through acquisition, which effectively is, all these young people coming out of elite schools and, great career backgrounds saying, hey, I don't want to do that anymore. I want to go buy an enduringly profitable, small, $1 to $10 million enterprise value business and be a CEO and run it. That, movement with COVID and people kind of reevaluating priorities, coupled with the great wealth transfer, really set off a boom in small business acquisitions. And so in 2021, while working in big law, I had been watching the conversation on social media about the business buying environment for a while. Started a social media page called SMB Attorney, talking about M&A. Because again, I had been a big law M&A attorney, and quickly had many people come to me saying, "Hey, I need help with a 2, 4, 6, 8, $10 million deal." So we decided to launch a boutique in the space in May of 2022, so 3 years ago in 2 months. And did well over $1 billion in closed transactions pretty fast. Did about $950 million in closed transactional volume in our first full calendar year. And then really have grown, and now we've got a lot of closed corporate transactional clients that are coming back to us for all kinds of needs. So we're really starting to expand into general corporate and tax and pretty much everything under the sun. We also are developing some pretty cool products to try to kind of revolutionize the small business legal space and streamline it with AI, with technology and the like. So it's been a really fast and fun couple of years. And that's how we got to today.
Hmm. You mentioned you're at Big Law. You're looking around. You're like, wait a minute, this space is interesting. It seems to be growing. There might be potential here. You mentioned the great wealth transfer. A lot of people, maybe they're on social media and they're running around. They're looking for opportunities. They might have heard for it. I think with the baby boomer generation, they're set to offload over $7 billion in businesses by 2030. A lot of people might be thinking, wait a minute, what does this stuff mean? Maybe they're a little overwhelmed. What exactly, kind of how would you explain in a way that would make sense to someone who's really new to this field, thinking, wait a minute, what is this silver tsunami thing they keep talking about? Like, what does this actually mean?
Yeah, so the great wealth transfer is an economic concept that's very real. The baby boomers have more wealth than any generation in the history of the world. They are aging, and at some point here, they've got to pass that wealth down, spend that wealth down over the next couple years. Many people will point out that they're not just going to give it to people gratuitously. Much of it will be spent in long term care and the like, which is definitely true. But all of it creates opportunity. Anytime money is changing from one person's hand to the next, unless they're just gratuitously giving it to their kids, then there's going to be business opportunity that's created. But part of a sub part of that is that baby boomers own a lot of American small businesses. Most American small businesses are owned by baby boomers, and a good portion of those don't have children or an heir apparent to take the business. So, if mom or dad have run like a stained glass restoration business for 50 years and it's hard as hell, Burke, and you grew up watching them as entrepreneurs, more like, and you've gone to a great school because mom and dad were making, a great living. You probably grew up to be an accountant, an attorney, a doctor, anything but an entrepreneur, right? So now mom and dad need to sell that stained glass restoration business. They have to go out to the market to sell it to somebody. Now, not all of those businesses, I think the count is that there's somewhere in the neighborhood of $7 to $10 trillion of these small businesses that don't have that heir apparent, but not all of those businesses are going to be saleable, right? Many of them are one-man band businesses. They're built off the reputation of the selling individual. And so it wouldn't make a great acquisition, or an acquisition, frankly, that's even bankable, meaning can you get a bank to lend on it? Or, viable, can you acquire and actually get something out of it? Most American businesses are service businesses. They don't have a lot of stuff, right? They don't have big machinery or, really anything except for people, a name, contracts. Maybe they have contracts with their suppliers and their customers. But they've got a name, and they've got, some employees that are executing on the work, right? That's sometimes tough to sell. So not all of it is saleable. But what is happening, Burke, whether you're buying or you're building, is it creates a ton of opportunity, right? So let's say the local HVAC business, it's, the dominant player in the area. That may be one that has great enterprise value and would make it an awesome acquisition. If it's not, if it's Larry, the HVAC repair guy, he might not have anything that he can actually sell. But when he retires, people can't call Larry anymore. They got to call somebody else. So whether you're buying or building, it creates opportunity. But roughly, why people are so excited about this opportunity, and even in academia, it's in Harvard, Yale, Stanford, Chicago Booth. It's the entrepreneurship through acquisition club is the most popular club on campus, because simply on paper, if you look at these businesses, it sounds incredible, right? The average business that someone's going to buy is doing 750 to 1.5 million in earnings, and they're going to sell for somewhere between 2 to 5x. So using $1 million example, you got a business that is cash flowing $1 million. You're going to buy that business for somewhere between $2 to $4 million. You'll buy it with SBA 7A debt, which requires you to put somewhere between 5 to 10% down towards the acquisition, which you can get investors to help you with. So if you're thinking, well, Eric, I don't have 10% down payment, very few people do. They get investors to help them with. There's no shortage of those investors. But the upshot is, for somebody like you, Burke, imagine you went out today at 18 years old and you bought and assuming you could manage it, no, not a personal attack, but running these aren't easy. That's the other half of the story. We'll talk about it in just a second. But you go buy $1 million cash flowing business today. You're 18 years old. You buy it with 10-year SBA 7A debt. And let's say you do nothing but don't screw that business. And let's say you buy it for $4 million and you do nothing but don't screw it up for 10 years. You've now paid that business off. You're 28 years old and you own a business that produces $1 million in cash flow per year. It's a pretty amazing proposition. But more, universally what's happening is you've got MBAs who are 27, 28 years old that are doing it and going, I'm going to be a cash flowing, debt free millionaire by my early 30s. That sounds way better than going to Goldman Sachs or McKinsey or one of these places where I'm going to kill myself. So that and career individuals too. Most folks who are looking 25 to 45-year-old, most of them are men. Happens to be pretty male dominated. There are many fantastic female searchers and female acquirers, but that's the by and large the demographic there. But it's a very attractive proposition. Now the detractors will tell you that it's also a very risky proposition, right? SBA default levels are very low, right? So if you go take an SBA 7A loan, buy a business, according to the tables that the SBA has put out, the likelihood of that loan defaulting and being charged off is very low, like sub 2%. And that sub 2% is going to include things like restaurants and really bad businesses as well. So if you're a savvy individual and you go buy a high quality business with barriers to entry and lack of customer or, key man dependency, then I would think that the risk would be even lower. You do quality of earnings with a good financial accountant. You have investors that know how to look at these deals and help you find a good one. Default rate is going to be pretty low. That doesn't mean it's going to be an easy road though, right? Incredibly difficult. We see some buyers have tremendous success. We see other buyers not. Who are the folks that have the success and the folks that struggle? It's fairly obvious in hindsight. If you have transferable skills, if you buy a tree trimming business without tree trimming experience, that's going to be a little bit of a learning curve, right? If you buy, and if I'm a lawyer, right? If I go buy a foundry, and I got to go stand up before really tough, gritty blue collar men, post closing, and my suppliers and my customers are really tough blue collar gritty dudes, and I walk in, it's not really going to instill a ton of confidence. And then just generally, being an entrepreneur and this, your startup crowd this will resonate with them. It's very tough, failure rate in starting an American small business is north of 90%. So we've got the opposite problem, right? When you fail with an American startup over 90% of the time, that sucks, but you don't have multi-million-dollar personally guaranteed debt like you do with the small business acquisition. So you're trading likelihood for magnitude. Startup is high likelihood of failure, lower magnitude. Buying a business is lower likelihood of failure, much higher magnitude. So pick your heart, right? So that's generally, I know I just rambled for a little while, but just to, to establish a baseline for the audience, what's going on. There are a couple of books that are really powerful seminal pieces in the space, the HBR Guide to Buying a Small Business and Buy Then Build. And then, as you said, we do a lot on social media. We formed a law firm called S&B Law Group that principally does these transactions and has closed well over $1 billion of deals since we started 3 years ago.
Mm-hmm. You mentioned we're going to dig a lot deeper into this, but I want to go back to the social media piece because you're in big law. You're seeing the space. We covered what the space is, why it excited you, why you thought there was an opportunity here, why you want to specifically do something here. But then the kind of instinct is, okay, maybe I should go start a Twitter page. How did you make that connection? Why was it you thought, okay, maybe my next step here should be to go do content around this? Why did you think content was going to be the thing to help you get into that space?
Well, it really wasn't, right? The content was kind of a happy accident. What I wanted to do is I wanted to get familiar with the small business acquisition space, possibly even make an acquisition or be a part of an acquisition or do some investing myself. And I thought, based on looking at the conversation, that there was a void in kind of the legal discussion being had and how you actually buy a business, right? And so I started sharing content on just like the nuts and bolts of M&A, and it took off really fast. I had no objective of starting a law firm at that stage. I had no idea where it was going to go. I didn't even know if anybody was going to read my tweets, right? I had no idea that I was going to get the type of following that I've gotten. And, it's 130,000 ish right now, which is, it feels like a lot for a legal, uh, you know, um, type content posting deal. So, I saw a great conversation going on with what seemed to be great people, right? You look at it across social media, the influencer crowd, the people who are actually talking. Influencers are people who are just willing to talk, call it whatever you want. Um, and I thought, here are some people I want to get to know, and this is the way that I'll do it. And it turned out to be incredible, right? Like social media and X and LinkedIn and the various platforms, it's like the world's most powerful country club, right? Instead of like local, networking with 300, wealthy and connected people in your area, you're networking with incredible people all over the world. And what's cool about it is some of them are not even active, right? But if you put it out there and you show people what you're about, you talk about ideas and you be helpful, people will come find you in mass, in mass. So if you're somebody out there that's like interested in starting some sort of disintermediated professional services business that can help people pretty much anywhere, social media is an incredible conduit for that right now. Yeah.
It almost seems like, correct me if I'm wrong, but one of the big reasons it took off the way it did was because you kind of, as you mentioned, you find this topic that not as many people are talking about, and you had like really practical knowledge on closing these deals and making these deals come true. And because you could share those details and because you were who you were with all your experience, it's, you identify this unique gap, and filling it, that's what allowed you to take off so quickly.
Yeah. Yeah, totally. I mean, listen, there will always be a place for people who provide valuable content, valuable information for free, right? If you are willing to share what you've learned, Burke, publicly, there's always going to be a positive reception to that. And folks should lean into that more, right? And many of the social media people, I don't. There's a Gary V. He's like, I hear it all the time, like hook jab or whatever. But the concept is simple. Like if you are helping people, and this is what people have discovered always in like local networking is be a conduit, be a resource for other people, and you will almost always get more than you give, right? What comes back to you will be 100x what you give, as long as you give gratuitously and sincerely, and the information is actually valuable, right? So more people should lean into that. They really should, because I don't care. Social media is getting crowded, and maybe it is. I don't know. That's maybe my perspective, but um, anytime we do anything that is giving away value, we're always getting more out of that than we're giving.
Interesting. I want to go back to the ETA conversation. I know we kind of like went on a side tangent there, but you mentioned in a lot of these colleges, ETA is becoming the most popular club there is. A lot of people that would have gone to McKinsey or Big Law or some of these massive firms that are thinking, okay, well, you know what, maybe I should go into this space. It's for those that aren't familiar, it seems like it's an exciting space. But for those that have been hearing about it, have seen the Harvard Business Review articles published about it, do you think to an extent it's overhyped as this gold rush, perhaps, where it's like it's perfect, you just buy a business and it's going to be super easy and it's all going to be smooth sailing? Or do you think it's like, do you think that there's an extent of that perception of like, what, it's just going to be super easy. I'm just going to get an SBA loan, finance most of it, seller finance some part of it, and like, we'll just be, we'll be fine. Like, where do you kind of see that perception right now?
Well, yes. I mean, there's a lot of enthusiasm about the idea, and I think some of it has actually waned. I think there was more enthusiasm probably 12 to 18 months ago than there even is now. Um, but it's an interesting thing because um, it's not that difficult in concept, right? what you need to do to acquire a business is not rocket science. It's hard in execution, right? Going out and actually convincing a broker and a seller to sell you a business, getting through the process, doing it the right way is a challenge, right? You're juggling a lot of balls, or you got a lot of balls up in the air between just in the deal process alone. You've got to keep the seller happy, you got to keep the broker happy, you keep the bank happy. If you're doing financial diligence, you're drafting and negotiating legal documents while doing legal diligence. You're negotiating with the landlord. And then you zoom out from that. Many people have day jobs and they have families and they have children and they live in Virginia and they're looking at moving to Colorado, and it's to buy a business. And it's, the execution piece of it provides a lot of off ramps for the wrong people. The people, like I just had a consult with a gentleman who he's been at it for 2 years. He sent me a deal 2 years ago, and he finally has something under LOI that's through QE 2 years later. And he was like, Eric, I'm just not giving up on this. Like, this is what I want to do, and it's what I'm doing. Right. And so people like that, over the course of 2 years, Burke, like if you weren't really invested and committed the way you need to be committed to make it work, or to at least say I was the right person for it, you're going to get off at some point in that process. Not everybody does 2 years though. I had another buyer who exited recently. He bought a business about a year ago, and after about a year of operating, he said, "Hey, this isn't for me. I don't like operating. I enjoy the deal process." But so he sold his business to a PE roll up, and he's going to stay on with them in kind of more of an operational capacity with some upside with the PE roll up now. And so he pulled the plug, said, "This isn't for me." So there's a ton of enthusiasm, and across social media, there's lots of people who are tapping into the entrepreneurial groundswell, right? Not just in business buying. There is a groundswell of service providers and startups and SaaS companies and, different businesses that are being born out of it's between the changes in lifestyle requirements post COVID with technology. There is a boom in entrepreneurship happening, and a lot of it's real. A lot of it really is real. Like I said, I got to know a lot of these people on social media that I had, kind of observed for a while, and now I've represented many of them, and they are really doing cool stuff. Like many of them are doing awesome stuff. But there are plenty of people that, think it's sexy and think, the idea of, I call it business-tainment. It's voyeurism for business. I've got a day job and I hate it and my commute sucks. And so on my ride home, I'm going to listen to some podcast about starting a business, and it helps me get to the next day. And that's okay too, but in those clubs too that you mentioned, or that I mentioned previously, you circle back to, not all those people are buying businesses, right? In fact, it's a small subset of them, huge headcounts, very few pull through of people who actually ultimately acquire a business. So I think people like to talk about, it's the sexy thing. And then there's some hostility that comes back against kind of the trend. You know how it is. Something becomes popular and then people like to push back on it. Well, business buying is somewhere in the middle, because even though there's a lot of people that think it's super sexy and interesting, there's very few people who are actually executing on it. And those people who actually are in my opinion, are oftentimes, at least who we see in our firm, are the people who should be buying businesses, people who have transferable skills and are doing it the right way.
Fascinating. We talked a little bit about, there's a general boom in entrepreneurship. If you're a young man or woman today looking at the ETA space, you're like, you know what, Eric, I am committed. I do want to do this. I do want to get into this space. I am going to be committed to it. How would you, say you're 18, 19, 20 years old, how would you structure where you go? Would you go get maybe a blue collar job in the trades to learn how to be able to operate a business like this, to be able to operate in that world? Would you mentioned you went to Duke, would you still go down the college route? What's the optimal way for especially a young man or woman in today's world to structure their lives and structure their paths in a way that could get them to those outcomes?
Well, I mean, listen, Burke, you got to learn how to operate in society and like command and deserve respect before you'll get it. And there's plenty of people who just develop faster, right? Like me at 18 years old, Burke, like I'm not hosting a podcast like this. It's just not happening, right? And if I did, it would be horrible, right? And I wouldn't even know what to ask someone like me. So you're way ahead of where I was, right? But so people develop at different ages. But I do think that, if you're going to be taken seriously, especially if you're going to do something that's high stakes, if you're going to go fundraise money, lots of money, or you're going to buy a business and take a big loan from the bank that's personally guaranteed. Part of me wants to say do that early on. Do it while you got nothing to lose. You got no kids and blah blah. But another part of me is like, hey man, 25 years old. I still got nervous a lot. I didn't know how to carry a good conversation. I didn't know how to run a meeting. I didn't know legal concepts. I didn't know, many things about life, right? Me at 35, I rarely get nervous. I can go up and publicly speak. You can put me in front of a crowd of 100 people with no script, and I'll talk for 45 minutes and it'll go fine. You can put me in any meeting at a dinner with anybody. I'll know how to talk to them and portray confidence, and I think that stuff really matters. I also know how to work. I worked a sales job before law school, and we worked 60, 70, 80 hours a week. And, then I went into law school, and many of my law school classmates didn't have that background and didn't know how to work like I did. They didn't study like I did. They didn't get the grades that I did. They didn't have the opportunities that I did because they didn't have that experience. So go out, and if you're a young person, you want to go out and get a lot of experience, man. Do sales, and grow up a little bit. And as you do, the bigger and bigger opportunities will start to present themselves to you. But get yourself directionally focused too, right? That's part of my issue. Like, I got to a great place. I'm very happy with where I am in life, but I had no idea a couple years ago that starting a boutique law firm like this was a viable path. That one, that I had the skill set to do it, and two, that it was lucrative and interesting and fun and created a great quality of life. I thought starting a boutique law firm meant my name would be on park benches and I would be doing personal. I'd be on billboards and it'd be weird. I'd have an office with crappy furniture and, quite the opposite. And so, it's nice to, if you can get yourself directionally focused, but a lot of it's just going to be, you don't even know what you don't know, until you've had some experience.
Mhm. You mentioned starting a law firm, and you kind of had these different expectations than and there was like a different reality you faced. Going from like big law to, I know we're jumping all over the place. It's not chronological. It's just, but I do want to ask you about that part. Like, were there any moments where you were like, man, I kind of regret this, or I kind of like, any moments where you're like, oh crap, I don't know what I'm doing here, or any kind of those moments where you're like, man, maybe I shouldn't have done this.
Um, I really don't have any regrets, and it's not like a no regret. I really can't identify anything that happened in my track record that I look at and go, if I hadn't done X, Y, or Z. Um, maybe plenty of things in like my personal life, but professionally, not really. And actually, not even in my personal life. I don't know why I said that. It's really, you know, I've had a really fortunate path. I went to, we'll back way up. I graduated from high school with a 2.5 GPA. Wasn't a bad kid, but wasn't focused. Went to community college and then quickly realized like, okay, shit, if I'm gonna make something of myself, I'm gonna have to, work. I'm gonna have to focus. So ended up doing pretty well at community college and then got an internship with Disney that kind of got me out of my environment for the first time. I moved away to Central Florida, and then after it was over, moved back to Detroit. And I was like, dude, I do not want to move back to Detroit. This sucks. The world is much more interesting, kind of cool place than I had any idea. And so was really kind of off the races after that. I went to undergrad and then did exceptionally well in undergrad, graduated summa cum laude with a, almost a 4.0 GPA, and was, had a great undergraduate experience, and then went to a really hard sales job, and did well there. But, that was a job that really taught me the value of time, the value of effort and hard work. And so, went into that experience, or coming out of that experience, went into law school and started at the University of Florida, which is a solid top 50 law firm. And I tweeted this story the other day because people ask me all the time, like, what is your advice? I'm thinking about going to law school. What's your advice, Eric? And it's like, damn, I don't, unless you are gonna go nuts, don't go, right? Because you go to law school and you're talking hundreds of thousands of dollars of tuition plus opportunity cost. And many law schools are just not producing the results. They're not producing the ROI is easily quantifiable. Go to lawschooltransparency.com. I get in trouble for this take all the time, but the math just doesn't work. Unless you go to a top 14 law school or you go to a very well-respected regional law school on a full scholarship, you're not going to get ROI by going to law school. So if and many people are like, Eric, I don't care about ROI. I want to be a prosecutor. Cool. Go be a prosecutor. But if you're trying to have a viable, a healthy career where you're going to make good, because many people think, oh, law school, I'm just going to make all this money. No, you're not. You're not. In fact, many law school graduates have hundreds of thousands of dollars of debt and they make 40 to 65,000 per year. Like, it's terrible. It is a profession of the haves and have-nots. So I went to law school and I went crazy, man. I knew that I had to do well. I grew up in a lower middle class family. And plus I had just, a couple years earlier graduated from high school with a 2.5 GPA, big imposter syndrome. And again, that's that being 25 I was talking about. And went crazy and was able to, finish second in my class in my first year and transfer to a top 14 law school as a result of, really being prepared and then just going all in. But again, you talk about that maturation process. Like I wouldn't have been able to do that in my early 20s, but by my late 20s, after having had that sales job, having had that undergraduate experience, I was different based on my experiences. So, I forget what the original question was necessarily, but,
It was about like oh crap moments starting your own firm. But I want to shift gears a little bit. We've talked a little bit. Okay, what is the space? We've talked a little about your own personal story. A little bit about okay, how would you prepare yourself? Let's say someone's in the process of okay, you know what, Eric, I've got some experience. I'm ready to start doing the deals. Something you talked about before was once an LOI is sent, there are a few things that usually kill deals. One of them is you start getting into finances and you start seeing some red flags. Oh, customer concentration is higher than we expected. Something I'm always curious as I'm looking at is I'm looking at as a total outsider, totally clueless. How do you find that balance between like, oh, this is something we can fix. Like maybe, I don't know, you see the company's customer concentration side, like, oh, we could just maybe get more clients as we, and maybe this is like a really ignorant thing to say. That's why I'm asking it. Like, how do you balance out like, oh, this is such a red flag that we can't fix it. We should walk away versus, you know what, if I do this, I could maybe fix. How do you find the right balance there?
Well, generally speaking, most people don't want a distressed situation. I don't think you're suggesting full on distress, but you're saying something that has a major character flaw. Now, so I'm going to argue against myself, right? Because on the one hand, you want to find a high quality business. You cannot assume, Burke, that you're going to be able to run this thing better than the seller. Oftentimes we hear people all the time go, well, they don't have a CRM and they don't have a marketing strategy and blah, blah, blah. We're going to do all these things. Well, you might, and that's great, but also don't assume that you're smarter or more qualified to run this business than the seller was. You may be, you may not be, but I can promise you they're not a dumb individual, right? So at a baseline, look at that business at face value and say, if it stays the same, or even in the J curve, if it falls off a little bit, as I'm learning, what will happen? Underwrite it conservatively. But there are ways to fix problems with businesses. You can structure around it, right? Really mitigate the risk. The most powerful tool in small business M&A or Main Street M&A is a contingent note, which many people are familiar with the concept of an earnout, which basically means I'm going to pay you based on performance. You can't really do that with SBA financing, but what you can say is if the business doesn't perform to a certain extent, then or certain things don't happen or do happen, then the note will fall away. So if you've got key customers, let's say you got one customer who's 25% of the revenue, and we're concerned that we're going to lose that customer, make 25% of the purchase price tied to the retention of that customer for 12 to 24 months. And what that does then is all of a sudden the seller is incentivized to stick around and help make sure that that customer doesn't fall off. Um, and so you can structure around issues. Now there's a long negotiation dance because seller's going to go, if seller has multiple offers that don't have those features, your offer is less desirable. And also they're going to go, well, Burke, what if you screw it up? What if this customer just doesn't like working with you and now I've lost 25% of my purchase price? That's not really fair. So you can structure around that stuff, but it is going to be a long negotiation process.
You mentioned sometimes you're looking at deals, and sometimes buyers will get a little arrogant and think, maybe I can probably run this business better than this person. I'm sure I'll figure it out. Like we just do a bunch of this tech stuff, and yeah, it'll be fine. How do you kind of maybe distinguish between knowing that there are gonna be parts where you can solve these problems, but also know like kind of walking that fine line between arrogance and knowing that you're maybe a little savvier than the owner in certain aspects, if that makes sense as a question.
Yeah, I mean, listen, I'm not saying don't have a thesis for the business, right? You buy a business and you're a marketing, you own an SEO agency, and you're like, yeah, I'm gonna add SEO, great. You know, um, but what I am saying is that in almost every transaction, 5% of the time it goes really bad, 5% of the time it goes really well, 90% of the time you are grinding to the right, right? You are in a knife fight every single day for years on end. And what's cool about that is if you've bought a business with, um, $5 million of enterprise value and you just sustain and you put down 10%, you just sustain for 3 years, well, you're probably a millionaire on paper. Pretty cool. I don't know anything else that you're going to be able to have that type of accretion of wealth in that period of time. But you should have a thesis for it. But what I'm saying is expect it's going to be a grind to the right and expect that there's going to be a learning curve, a big J curve, and just make sure that you can survive that, right? Certain things are survivable, certain things are not. If you don't have adequate working capital in a working capital intensive construction business and you have to walk off jobs because you can't pay your people, your business is dead. And you're in deep shit financially. So certain things can be ignored, certain things can't. Have a thesis, but also understand that, if it goes in the other direction, that you're going to be able to do that as well.
I've heard you mention the J curve a few times. What exactly is the J curve?
Well, it's a visual representation of the learning curve. Anytime you learn something new or you take over a business, there's a, J type growth that's going to happen. In the first year or two, you're going down. The business is going down as you're figuring out what's going on. And then hopefully all that stuff that you said you were going to implement, you're actually able to implement it and it actually works. And then you kind of hockey stick up to the right. But in the early innings, you should expect with anything. I always think about entrepreneurship. We're 3 years into this thing. That would make me a junior in college. I wasn't the best college student as a freshman or sophomore because I didn't know what I was doing. But by junior, senior year, all right, starting to figure this out. Post grad, all right, I know my way around, I know what's up. It's going to be the same thing with entrepreneurship and with the business that you've acquired as well.
Mhm. Absolutely. Eric, we've talked a little bit about deals, the market. Want to talk a little bit about the future now. Looking, across the next 5 years, 10 years. You mentioned AI is something you've been thinking about. You've been thinking about streamlining the process there. What are some maybe bold predictions you have on where the market's headed and how AI, social media, these things that, you're seeing and you're in the world of, how do you see them affecting this?
I think there's a groundswell of entrepreneurship happening. I think that there are people that typically in prior generations that would have worked for others for, you know, um, decades that are now striking out on their own. It's easy to do that. They're doing it from behind their computer at home. They were building it on the side during COVID. And I think that that's going to create a lot of opportunities. I mean, if you even look at things like school.com, Alex Hermosi and all. I mean, that's just communities of people that are starting businesses that otherwise typically would have been probably W-2s. Um, so that's interesting. And if you can tap into that, if you're an accountant and you have the ability to start your own accounting firm, there's never been a better time with more resources to do that. I do think AI obviously is going to reshape the entire landscape. I think if you're a knowledge worker, professional services worker, you look out for AI. And if you're not utilizing it, right? Like to me, I'm not scared of AI. I'm like, let's learn how to use this. I use AI in my business currently every single day. It is a very powerful tool already, and I anticipate it will just continue to get more and more powerful. So you want to lean into that as well and leverage it, right? Um, but otherwise, I don't know, Burke. I'm not a guy who spends a lot of time getting caught up in big headlines. I think that if you are doing what I advocated for early 20 something year olds throughout your whole career, which is just get after it, man, do different things, learn, grow, you're going to continue to find ways to navigate. There may be setbacks at times and hardships and all that, but you'll be fine over the long term.
Absolutely. Well, last question I want to ask you about, Eric, is some say the SMB market is getting crowded. We talked a little about the rising interest. Do you think generally we're headed towards a buyer's market, seller's market, or some totally new? Where are you kind of seeing that headed?
Yeah, I mean, it will almost always be a seller's market for high quality businesses. Especially when you're talking about SBA level acquisitions, SBA debt. You're not going to be able to pencil out anything over a 5x multiple, which means you've hit, sellers, the very most valuable Main Street business is going to be capped at a 5.5 times multiple, depending on what it is, which means it'll be achievable for many people, and many people will want that asset. And so that is almost always going to be a buyer's market. Anytime there's a good business that comes up for sale or becomes available, they get inundated with prospective people who want to acquire that asset. So I think that it's going to stay a seller's market. But I think that the flip side of it is there really is a generational wealth transfer happening. It is happening. Many people are going to quibble with, well, not all the businesses are saleable. They're not all saleable, but the market share is becoming available. So whether you're buying a business, building a business, there's going to be a ton of opportunity for you in the next 2 decades, I think, really to become an entrepreneur. And, at the high level, Burke, it means, starting something fancy on the internet. But look around yourself in your community, to get a sprinkler head fixed here in Southwest Orange County or in Florida, it's $125 an hour to get somebody to come out. I call every single person on the front page of the results to get somebody to come out to fix something at my house, and none of them even want to come. They seem like it's a burden to them. Like, I guess I'll fix your car, or I guess I'll come out and fix your house, or fix your sprinklers or whatever. So there's a ton of opportunity for anybody who's willing to get out there and seize it.
Absolutely. There you go, Eric. That's it for the questions I've got. Anything you'd like to add? Stories, lessons, tips, anything you'd like to end off with?
No, I think it's cool that you're doing this though. 18 years old and you've got a podcast like this. That's awesome. And I wish you the best. I know you're going to be successful over the long haul, and I'm looking forward to following along.